All right, it did just hit 1 o'clock, so we will get started. I'd like to welcome everybody to today's webinar on Simple Fund 360 Education Week. Today's topic is going to be all about navigating segregation and fund pension policies. My name is Daniel, and joining me is the host of today's webinar, Alex.
Hello, Daniel. Thank you.
So Alex will be running today's webinar, but before we get into that, we do have some housekeeping matters to attend to. First thing to mention is that all participants are on listen only mode. However, if you do have any questions during the webinar, please do use the Q&A function in Zoom. I myself and a number of colleagues here will be around to answer any questions you may have. As well, we'll have a short section towards the end of the webinar where we can answer some questions as well. Given that as well, all of these webinars are being recorded as a part of Simple Fund 360 Education Week. As you can see on your screen here, we are approximately halfway through the week here. We do have a number of other webinars coming up, and if any of those do interest you, I will post a link in Zoom chat right now where you can access the sign up for any of those other webinars. They're all free, and once again, they are all being recorded and will be uploaded to the BGL YouTube channel. In addition to that, BGL is also running education weeks for their other softwares, which includes Simple Invest 360 and CAS 360 as well. So if you did want to sign up for one of those other webinars, that is on the exact same page. Simple Invest 360's week will be happening next week, and the week after we'll be covering CAS 360. So if you do use those softwares, it might be a great introduction into those softwares as well. But that's enough for me. I'll hand off now to Alex to continue with the webinar. Alex, were you there?
Thank you, Daniel. Yes, so let's jump straight into today's agenda. So we'll be looking at setting up segregation policies in Simple Fund 360, fund pension policies as well, which connects together with requesting for actuary certificates, and then useful reports and any type of common issues when it comes to segregation or coming to using or requesting actuary certificates. So first off, we'll touch base and we'll go straight into setting up segregation policies. So I'll just switch over to the software in just a second, and we'll touch base on creating new policies and copying existing policies. So you can see I'm just on my entity dashboard at the moment, and it's actually quite easy to navigate through into your segregation dashboard. You just have to go across to your left-hand toolbar and put your cursor on member and then select segregation dashboard. So if you are planning to use any kind of segregation for income purposes for your SMSF funds, you will have to navigate through to the segregation dashboard. Now you can see here we've got an existing policy set up from 2018. We are currently in 2024 financial year. So you have two options. You have the option of either creating a new policy, which so if you click onto it, you have the option of copying your existing one or creating a new one. So it's quite easy if you in the sense of when you are starting out, you won't have an existing policy. You would just simply click on to create new policy, and any kind of existing investments and account types and expenses will already pre-populate here once you have your data set up in your transaction list in your ledger. Pretty straightforward. And in terms of going back, and I'll just show you what it looks like when you are editing. Sorry. As you can see, I'm in the 1st of July 23. You can see I've created a new one here. So I'll just get rid of this one here and we'll just use the existing one. So I'll go back, get rid of that, and then go create new. And then I'll copy the existing one that we already had set up initially. So you can see pretty straightforward if you've had one set up. Brings all your accounts across. If it's pension, accumulation, and joint pools, if you've created those, that will come across. And you'll see here my investments are on my left-hand side, and the expenses also, if you have them, at bank deposits and income. So you can allocate that accordingly when you select your pool. So you can see the selected pool at the moment shows as Jeevan. We'll go into the next part, which is actually creating the pool and allocating it any kind of investments or expenses, bank deposits and stuff like that into the account. So it's quite easy. There is a create new pool here option. You will see on the right hand side. You'll see what will be required is to enter a pool name. So we can put the name in here. You can either put pension or accumulation, depending on how you want it to set up or however you want the name to be represented as for the pool. It's completely up to you. So if I was to go ahead, select that, you can see you can even with a pension account there. And then the last part of that third step is to allocate a percentage. So you will need to it to equal to 100%. Obviously, you know, if I was to put 99, you know, it will say here member accounts must add up to 100%. So of course, I need to go ahead and simply add that up to 100 and then hit create pool. So when you hit the create pool, what will happen? It'll just go back out here. It will just simply add this in under the pool list. So just a quick note as well, you can see here there's a set policy period. I just wanted to bring that up before we go on. The policy period generally will be for the full financial year, unless you may have a scenario where a member dies during the financial period and you may need to enter a second policy period. So just make note of that. Generally, it will be from the 1st of July to 30 June. Otherwise, if you need to edit the dates to set a second policy period to edit that segregation allocations in scenarios where it may be applicable, you may have to do that. So as we continue on, we've gone through, we've added the member pools, and let's actually go and look at what it looks like to allocate. So I'll go and select we'll go look at the joint pool. How about that? We'll look at the joint pool here. We've got a joint pool created. And if I click on the little edit function here, you can see the pool will appear. And I have a couple members here created already. So you got Matt, Jeevan, and Tony. So we've got Matt, who's got a pension account created here. You can see their pension. And we've got one here with Jeevan, who's got an accumulation and a pension. So you can see this pool is made up of both pension and accumulation pools. And then you can see the pool allocation here of the 54.49%, 9.12, 1.76, and 34.63. Just to touch light on what we're going to be looking at here as well with the allocation of the member pools, I'll just go back and update that pool. And you'll see there's investment here of property and some shares. So let's go ahead and just quickly show you what it looks like if you were to allocate the property. Now, it is pretty straightforward in terms of moving and deselecting if you've made a mistake in terms of moving your investments into the pools. Now, in terms of the property here, if I was to allocate this property into this joint pool, you'll notice that the income for like rental income from that property, or if you have, say, for example, shares that I could allocate into this pool as well. General sense is that if that was to occur, what we should see is that 54.549% of, say, Matt's allocation that we've set up will then be accordingly distributed and taken up in terms of bearing. So income will be allocated for Matt for 54.49%. And then in terms of bearing the expenses as well, if there's expenses allocated, such as, say, property expense, that will then therefore be 54.549%. So it'd be pretty straightforward in terms of that. So in terms of the pension and accumulation as well, we do know that with pensions, the income earned is tax-free in the pension phase. And in terms of expenses related to pension accounts, they won't be tax deductible since the income is going to be tax exempt. And again, with accumulation, income earned is taxable, which is the 15%, which we are quite aware of. Expenses are going to be tax deductible, and you can offset that against taxable income. And in terms of investments in accumulation phase, they are taxed for, I guess, for your investment specifically. If there's any capital gains, or it is subject to capital gains, but if it's been held for 12 months, then obviously you'll get a 1/3 discount. So that will be applied as well. So that is pretty, pretty straightforward and easy to do. One thing I'll quickly mention before we move on is you do have an option and a toggle here on the left-hand side. So on the left-hand side, if you want to allocate all these investments to the pool, you can just select this one little option here, and that will move everything into this joint pool. Alternatively, if I just deselect a few here, you'll see if I was to select the little drop down bottom button here, you'll see I can see CBA and DVR can now be selected individually. So you can either do it in bulk or you can individually select. It's completely up to you, but the functionality is there and easier enough to kind of maneuver within the software. I'll go back into my slides here and I'll move on to the next part here. So with regards to fund pension policies, and just a few prerequisites, I suppose, before we continue. So just making sure with I guess if we're doing segregation in general, I'll just make a quick statement that anything that is fully segregated, again, you won't be needing to apply for an actuary certificate, but you might have scenarios where funds aren't fully segregated. So let's have a look at what might entail in terms of what you need to do into Simple Fund 360. So with regards to requesting actuaries, we do need to move over from the segregation dashboard to member fund pension policies. And you'll see welcome to fund pension policy screen appear. And you'll see an option in the top right corner where it says new actuary certificate. Now, again, in the scenario where the fund is fully segregated, we can ignore that option of having to request the actuary. We can simply go into manually entering the details and then simply going through this part section here where it says non-deductible expenses. So you can enter the non-deductible expense percentages, whether you want to use ATO formula, user specified or actual percentages, you can also do that. With the flexibility within the software is there. We do default to ATO formula, but you can change that at any time. So in the case or the scenario where the fund is not fully segregated, you will need to go ahead and request the actuary certificate. Just make note that the prerequisites with that is making sure your member transactions have been fully finalized for the period. Your crate entries isn't a requirement, and just ensure there is time to time where you may have issues where if you request for an actuary, you have negative member balances, which can occur during the financial year. You will need to rectify those before we go ahead and apply for that actuary. Can be a common issue, and generally it would occur if, for example, you haven't created entries a day before when doing like a new pension or a payout, which is above 50% of the member's balance. So you might have some discrepancies or some negative balances that can occur from time to time if you don't follow the steps in the correct order. So in terms of requesting the actuary certificate, it is quite straightforward, and I'll quickly show you what it will look like. You'll have an option here between selecting Act 2 and Aquarium and obviously other providers here. We'll just go ahead and just select Act 2 for the moment. Now you'll get a message saying to confirm the segregation eligibility. Obviously you want to look at this and just confirm whether the fund is eligible for segregation, a method for tax purposes. We're just going to select not eligible at the moment. And now you can see here, the fund has segregated assets. Where the fund has segregated asset policies, you will be unable to provide information actually percentage for this fund. So if you do come across this, it's important to note that it depends on how you've set up the fund. So if you come across this, it's important to, it's common. It's a common query. You can obviously log a support ticket and see support for that situation. But otherwise, you can just go back and go back into fund pension policy and just review what could be. Sorry, let me just request for the actuary again. Yep. So you'll come up like that. So essentially, you just need to go back into the segregation dashboard, ensure that you've got everything set up correctly in here. In cases where you don't fully segregate the fund, again, you might need to have a toggle set up here, set up for to enable you to actually request the actuary certificate. So it's important to, again, ensure this toggle is ticked if you are going to enable and the fund isn't fully segregated. So if you are going to do that, just ensure that's toggles ticked, and you go back into fund pension policy, and you should be able to then request the actuary certificate. So just small notes there to make if the fund's not fully segregated or not. So again, if it's fully segregated, not a big deal. You won't have to go through that process, but it is. It's good to just go back into the period compliance screen. Just tick that little toggle on the right hand side, and then you should be able to then request the actuary certificate. Now, just make a note that providers will give draft percentages. Some, not all, but some will give you a draft tax exempt percentage. Essentially, what that means is that I'd say 99% of the time, your draft percentage will be your final actuary percentage received. So, this will pretty much be your final outcome. Just have to make sure you go in through and complete the application, which needs to be done on the provider's website. And with that being said as well, you'll see the percentages will flow through here. And it's as simple as, after that, it's just as simple as making sure now, once we've got the actuary percentage, we just need to ensure now, we've got the correct breakdown for the non-deductible expenses. So once you've selected that, you can simply just hit save, and then you simply go back into create entries. And obviously we've already created entries here. I'll have to reverse and recreate the entries in this situation because we've already applied for the actuary. So we make sure the percentages are being taken into account. And then we'll go into our report screen. I'll show you kind of a quick breakdown of some of the reports here. So one of them will be your exempt pension reconciliation report. And you'll see the percentage has now applied across the fund. So you can see the actuary pool and the percentage that have been applied on the income. And that will flow through towards the bottom here. You'll see the total. So the total ECPI, which is the 30,412, and you can reconcile that amount with certain other reports like your tax recs. So if I go into tax reconciliation, I'll just do a quick Control F just to search for exempt current pension income, and you can see that amounts will flow through and they will reconcile. Pretty easy and straightforward to look and pick that up on. Now, another thing I'll just quickly go back and show you as well is if I go back to fund pension policies, I'll bring that up, and you can see the percentage for general expenses using the ATO. So that ATO formula there, that's used 64.52%, should then also flow through to the non-deductible expense reports. So if I quickly bring up that non-deductible expense report, you'll see any expenses recorded, whether, in that joint pool, you can see there's a few there that's going to use the 64%. So if you need it to use a different percentage, obviously you can go back into your, fund pension policy and just update that there, whether you want to use the actuary percentage or a specified one, completely up to you as well. Another brief note I will make as well, there is some common errors that clients do make with regards to the actuary when the fund's in full pension, 100% pension. You need to also make sure that you go into the manually enter details. So the common one I've noticed clients sometimes forget to do is actually switch this here at the top right corner and ensure that it says that was the fund in full pension phase when income. You must select yes. So select yes and then save as well. So what will happen there is when you do that and you your tax exempt percentage will then apply. Any kind of capital gains will get ignored and losses will get ignored in that situation. So don't forget, if your fund is in full pension, to select that toggle, which is right here where it says that fund is in full pension phase for the full income. Yep. Otherwise, yeah, as per what I've mentioned in terms of requesting for actuary, yeah, it's pretty straightforward and easy to go through. And hopefully, yeah, hopefully that quick demo of what I've showed you guys has been quite substantial and a good kind of start to getting into the software and just getting used to doing kind of actuaries and setting up segregation. So if you missed the exempt pension income and non-deductible expense reports, I'll quickly bring that up again. So let's have a look here. I'll bring up the Simple Fund software again. So the reports are pretty easy to find. If you just go to the reports portal on your left-hand side, you can just click reports. I personally myself like to search for reports, but you can find these through the left-hand toolbars. So, so for the ECPI, the exempt pension reconciliation report, if you just type in exempt or just exempt as I've done here, you will automatically you will find the report here. Now, there's two ways. You can either add it to the report pack here, or you can actually just generate it by clicking onto this little option where the PDF appears. And you can see that report will automatically pre-populate for you there. And then same thing for non-deductible expense. If I type in the non-deductible expense, you can see that will then also appear. So again, same thing, you can either add it to the report pack or you just click onto the name of the report and it will just open it up into a PDF format for you. So you can either have that collated together. So if I want to do it as a preview for both reports, you can do that also. It's completely up to you. So if I've done that here, where I've got the exempt pension income reconciliation, and then right below, I've got the pension non-deductible expense report too. Just yeah, with regards to a few people just mentioning regards to when the recording will be available. If you've missed any part of this recording, they will be recorded. Sorry, the recordings will be available. Is it this week? Sometime next week, Daniel? Is that right?
Yes. So
Yeah.
the first four webinars have actually been uploaded already, and the webinars that occurred yesterday are just getting uploaded today, I believe. But I would fully expect all of them to be uploaded within a week after this week's done.
No worries. Thank you. I'll just quickly touch base on what Wayne's mentioned here. If two members has a small amount in accumulation and say 95% in pension, how will income and capital gains be split? With this one, it's a little bit difficult to kind of break it down because it really heavily depends on how you're setting up it or how you're going to set it up in Simple Fund 360. We can take, for example, that if you're going to actually use the segregation, anything again, like if you are just going to use the pools, that's completely up to you. I mean, you can do that, but it just means that anything that's sitting in the pension account, income will just be, you know, exempt from tax, and then anything in accumulation will just be, yeah, taxed. So in terms of capital gains, that split will just you'll see the capital gain split in terms of if I'm not mistaken, the capital gains reconciliation, which should take into account, say if you have an investment that's been disposed of, um, it will just use if depending on if it's discounted or not. It'll if it's been held for 12 months, it'll just apply 1/3 discount on that portion. And it should handle that it's a pretty straightforward one with the software. It will just account for it depending on how you've set it up. So kind of what I went through before. I'll just go and quickly edit that there. So yeah, so if for example, if it's Jeevan's pension, right, and we've just allocated something there, let's just say some shares. That so any kind of share that's been disposed of here. Well, again, if the fund's not in full pension for the full year, it'll just account for the gain. If there's a gain for it, if there's a loss, obviously you'll just treat it as a loss. I mean, this in terms of the treatment for that, you just need to consider whether the actual member for the funds are in full pension or not. If they're not, then obviously the actual capital gains from disposal compared to the actual income you get for dividends, that's where this treatment will occur, will be with regards to this screen. So if it's segregation allocated to the member, yep, for tax purposes, it's going to be what you allocate in the fund pension policy. So for tax purposes, just make note, it's everything that's in regards to this screen. For income allocation, that breakdown is in the segregation dashboard. But to answer you more specifically, Wayne, yeah, with that one, it just completely depends. If the fund's in full pension for the full entire year, then, capital gains will be ignored. But if you were to dispose of it where the fund's not in full pension, there's a bit of amount in accumulation. In that scenario, it will just apply depending on if you have a discount or if it's a capital loss occurred during that when you make that disposal.
We do have a question here that I think might be better for me to answer potentially. Will a recording be sent to us, and will the Q&A be sent as well? A recording should be sent out as a follow-up email to all registered attendees for the webinar. That includes the webinar slides as well. In terms of that, the Q&A actually isn't included, as we would need to go in and export it as well as function it. Export it into a document and then reformat it there. So unfortunately, the Q&A will not be included in that, just the recording and these slides.
In terms of setting a default actuary provider, there isn't an option currently in Simple Fund 360 to set a default. My understanding, I believe, is if you use the previous provider was Axe2, I believe it does. I'm not sure if that's the thing. I might have to test it. But I do think it does default it to the one you last used. But there's no actual setting to default an actual provider. In terms of changing the percentage for segregation, I suppose you can write a note in the fund. If you go to the fund dashboard, you can put a note in this section here where it says add note. That would be picked up and you can see it when you log in if you make any kind of changes specifically to the segregation percentages. So you can make a little note there. I'll just put a test here. You can see test note here, and you can see that note does display so that in order to, when they do log in, can see that note. So that would be completely fine to do. Is there any plans for segregation to show on the work paper? I don't have any update on that specifically. At the moment, we don't have an option for it to show. So It would more than likely just be a wish list item, Katie. So if it's something that you really are wanting to see in the software, would like to see that introduced as a feature, yeah, I definitely would say just pop it onto the wish list, or even speak to your account manager potentially and try and push that for that feature to be displayed.
Yeah, in addition to that, I do know that the work paper screen is something that the product team is definitely looking to work on, and they're keeping their eyes on it to see where it can be improved. So feedback would definitely be provided. I myself, I might go chat to them and I'll make sure they're aware that segregation reports and more segregation integration with work papers is desired there.
Yeah, so just mentioned, I think before, Paulina, that they're going to let you know. I think it was next week. You should get the recording and the slides sometime next week. Can't remember the exact. I can't give you an exact date, but it will be sometime next week.
I might actually answer this other one live as well, just because it might be a bit difficult to type out. Uh, there's a question about allocating general expense accounts across multiple pools, and that you would need to create a custom account. If you did need to, if the default expense accounts did not satisfy what you needed, then yes, you would need to create a custom account. That way you can edit the settings related to that. When it comes to actually allocating this to pools, you can only allocate these expense to one pool. In that particular case, what might need to happen is that you create specific pools for these sorts of accounts. That way, the percentage allocation is different to the other pools that currently exist. Um, so you can't allocate a single account across multiple pools, but essentially you can create more pools that are appropriate for individual accounts.
Thank you, Daniel. And just another one there at the bottom where at how to allocate income tax between pools. So with that one, there's no way to directly allocate income tax. It's actually under this unsegregated portion. So I think if I don't know if we've got it here for this fund, but if I go back into the dashboard, you'll see it'll most likely appear under the unsegregated pool. So that gets you won't be able to actually, yeah, you won't be able to actually segregate income tax.
But I do believe that does bring us to the end of today's webinar. We don't have any more questions. However, if you do have any more questions for us, please feel free to reach out to our team via either live chat or a support call, and we'd be more than happy to help you out. If you are joining us for another one of our webinars, I'm very much excited to have you there. If not, I hope you have a great rest of your day. And finally, I'd like to thank Alex for coming and hosting today's webinar. Thank you very much, Alex.
Thank you, everyone. I appreciate your time, and hopefully everything that you got out of today's webinar has been useful.
Thanks very much. There is one question I might just answer very quickly before we end, because could this method be able to be used for SMSFs with different investment strategies? Yes, that's essentially the premise of segregation, is to allow you to set up different strategies for your investments, have certain investments that only particular members have ownership of, allowing you more freedom to um, have those investments in the fund and not accidentally allocating them to other members. So yeah, thank you very much everyone for today. Thank you, Alex, and I hope everyone has a great afternoon. Goodbye for now.
Bye, guys.